All right. Hello, everyone. My name is Mike Ivancy. I'm the Director of Growth and Partnerships here at CNote. Really excited to have you all with us today for this joint webinar with ACE, Access to Capital for Entrepreneurs, an outstanding CDFI, and CNote, the financial platform that makes it easy for investors of any size to support CDFIs and financial inclusion across America. I'm only going to be talking briefly. I just want to introduce myself, introduce the webinar, and then give you all a few quick tips about how you can interact with us today. Throughout the process, you'll notice there's a polls tab. So occasionally I'll probably ask you all questions like how familiar you are with CDFIs and things like that to get a better understanding of our audience and to engage you all a little bit as we're presenting. And then please feel free, if any of you have in the way, you can go to the questions tab on the right here in this webinar and ask us questions. And we've reserved quite a bit of time at the end for Q&A, and we want this to be interactive and we want to answer your questions. So please feel free to ask questions and we'll do our best to get to them at the end. And if you see someone that asked a question that you really like or you want to see an answer to, I believe you'll have the ability to upvote that question and get that question answered. So why don't we kick this off? I'd like to introduce the two presenters today. So first we have Martina Edwards from ACE, and she's around 2 decades of experience in business and professional nonprofit leader. And Martina is an amazing presenter. Really excited to hear from her today. And she's also one of the first female stockbrokers. So really interesting story behind her. And she's kind of personified this building a more inclusive economy. And then following her will be Catherine Berman, the CEO and co-founder firm I work with as well. She's got extensive experience in venture capital, and she was a former managing director at Charles Schwab. And she can really take you all through her vision for impact and why we've partnered with CDFIs to do the great work that they're doing and support that. So with that said, I invite you all to ask questions and interact with us. I'm going to hand it over to Martina once she gets her slides ready to go, and we'll take it from there. All right. I'm going to exit stage left. I'll be back at the end. And Martina, I'm going to pass it off to you.
Thank you so much, Mike. Can everyone hear me? Mike, I guess you'd have to tell me if you could hear me. But thank you to Mike and CNote. I'm excited to be co-hosting this webinar with Kat Berman. And today, as he mentioned, I'm Martina Edwards from Access to Capital for Entrepreneurs. I am Chief of Strategic Partnerships. And today I'm going to hopefully demystify what CDFIs are, provide a bit of color into how the industry got started, and share some insights into what and how my organization, ACE, fits into the space. So what's in the name? CDFI is Community Development Finance Institutions. Community is we lead with community. Development references the fact that we develop people and places, and we do that technically through lending and financial education. So we're mission-driven financial institutions that are dedicated to delivering responsible, affordable financial products and services that primarily benefit low income, low wealth, and other underserved individuals and communities. We are not new. We are a 50-plus-year-old industry, and CDFIs are actually in every state. ACE has 3 offices across the state of Georgia. There are 1,200 certified CDFIs, and we are a $150 billion industry. It is my belief that we are a critical and impactful component of the financial ecosystem, financing urban, rural, and native communities. We are trusted. We have a broad set of impact and investment partners, including banks, philanthropic institutions such as foundations, impact investors, and individual donors, as well as government entities. So that was a bit of an aerial view that gave a 30,000-foot perspective of the breadth of our industry. Now I'd like to provide you with some context for how we got started. The current CDFI industry began taking shape in the late 60s and early 70s. It was really created out of governmental efforts to address poverty alleviation and racial discrimination. There was a war on poverty during the Johnson administration, and a big, and I would say today, we still are dealing with that tug of war as it relates to poverty. There wasn't a clear solution, but capital was definitely a part of the answer. So that led to the development of CDCs, Community Development Corporations, that were designed to work in both urban and rural poor communities. Interspersed within this timeline were a number of landmark civil rights bills which affected the financial industry, from Fair Housing Act to passage of the Community Reinvestment Act, which was meant to reduce discriminatory credit practices against low-income communities known as redlining. And CRA was really intended to address decades of inequity against not only folks of color, but also the places they resided that were deemed unsafe for mortgage capital. So they couldn't buy a home or achieve the American dream that so many others were able to do and build wealth and assets from. Also, those neighborhoods suffered from disinvestment. CDFIs expanded dramatically in the 90s by way of three things, which was the creation of the CDFI Fund, which is administered by the Department of Treasury and provides funding to individual CDFIs through a very competitive application process, which leads to capital grants, equity investments, and awards for what we call technical assistance in our world, which is business advisory services. Also, a revision to the CRA started to promote economic revitalization through investments in CDFIs. And this was explicitly an important measure for banks because it recognized loans and investments in CDFIs as a qualified CRA activity. Last but not least, a growing record of success also inspired confidence and new capital into our industry. One thing that we do as CDFIs is we lend prudently and productively in unconventional markets that have often been overlooked by conventional financial institutions. And those practices allowed us to fare very well during the financial crisis. I will tell you that there was a quote that I like to say that was from the CEO of OFN, and that's Opportunity Finance Network. And that is an organization that ACE is a member of. CDFIs exist to move money to people and places missed by traditional lenders. So whether you are a corporation or a foundation or an individual who has passion about different issue areas from women to entrepreneurs, small business, food deserts or agriculture, economic development, affordable housing, transportation, sustainability, you name it, CDFIs can be your vehicle for change. We are intermediaries. The value add is that dollars go to work across a broad subset of investments. We achieve social impact as well as quality performance. I will say we're not one size fits all though. ACE is a community development loan fund, but we do not take deposits and we specialize in small business. There are 6 different types of CDFIs, so you can have a community development bank, credit union, loan fund, venture fund, and micro enterprise funds. Each have different specialty areas. Operationally, CDFIs are not profitable, but we are profit maximizing. We borrow low interest patient capital that we have to repay. Who do we lend to? Individuals just like you and I with dreams. Small businesses, nonprofit organizations, those who are developers and doing things around housing and commercial development. And we offer flexible terms and longer amortization periods. We provide innovative financing products that can also serve customers who cannot meet conventional collateral or underwriting requirements. And we provide business advisory services for ACE, as an example, through our Women's Business Center. So what's the result? CDFIs make real impact. We don't see an abandoned building or a dilapidated alleyway. We see a shopping center, new schools, and housing opportunities for business owners, families and kids, and thriving communities. We transform people and places. We also create economic opportunity in the form of jobs, some through real estate, figuratively and literally change the landscape of what a community looks like, from affordable housing to community facilities and just development in general. We provide financial services for those who are underbanked and unbanked. And that leads to building blocks, creating a borrowing history for those individuals and business owners to qualify for future capital. At the end of the day, what I'm saying is that CDFIs help disinvested communities and people join the economic mainstream. So that's a little bit about CDFIs. I'd love to now take some time to give you a little bit of insight into ACE. We at our core give people, particularly small businesses, a chance when others can't or won't, because they see risk versus the opportunity. At ACE, we know that capital is part of long-term solutions to alleviate poverty, close wealth gaps, and begin to build healthy communities. One of the best illustrations of this is a client named Alex Getahoon, who came from Ethiopia to the United States at the age of 11. He moved to Atlanta in his 30s. He had an entrepreneurship notion and a niche expertise. Now, all Alex needed, let him tell you, was capital for equipment, space to hire one staff person, and approval from the Food and Drug Administration. But he only had $1,300 in his bank account. Achieving his goals were going to be a struggle without capital. Layer on to that, in 2008, we were going through a financial crisis, so many banks had closed their doors and lending had dried up. Lucky for Alex, ACE's doors were still open. We gave him his first $25,000 loan, and Speed Laboratory was launched. Alex rented 1,000 square feet of space. He hired his first employee, and that money let him get the business started, doing quality control testing on pharmaceuticals, chemicals, and medicines. The company paid off that first loan, got their second one to help with expansion. Now Speed Laboratories has more than half a dozen employees and within a 9,000 square foot facility with contracts with several Fortune 500 companies through their diversity supplier programs. Alex is our guidance, and he's really our North Star. And similar to Alex, ACE understands what it takes to be a startup because we've been there. We're a mission-driven nonprofit, but the process is the same. Our CEO and founder, Grace Fricks, a social worker by trade, spent many days and nights in the back of her mountain cabin pondering how she could impart change for technical college students in North rural Georgia who were looking to start a business, but often didn't have a family or friend to turn to that had the knowledge or even the resources to help them get started. She sought and won a $50,000 grant, and ACE was born as a micro lender, making loans up to $5,000 in about 4 different counties. Today, we are proud that we have helped 900 businesses across 68 counties and loaned just over $69 million. And that's a lot for us, but we've kept the same business model. We lend anywhere from $15,000 to $1 million. We can lend to anyone, but we do have a focus on low to moderate income women and people of color. Often folks are referred to us or come to us because they know we offer capital, but they quickly realize that we do so much more through a combination of coaching, capital, and connections, which we believe is our secret sauce. We help to propel entrepreneurs to the next level and catalyze their growth, whether they are an existing business that's poised to scale or a startup that's looking to accelerate. We help them to expand their business, generate jobs and income for their staff, and ultimately create wealth for themselves. Current clients in our portfolio, like Alex, and there are tons of Alexes in our portfolio, they push us and they drive our thinking about who we want to be and where we want to go. But we can't help them if we don't grow ourselves. So we put together a high growth 5-year strategic plan to grow from 18 million to 52 million, serve nearly 700 new clients, and help to create or retain 10,000 jobs by 2022. Our portfolio, the loan denial rate for African Americans, Latinx community, and entrepreneurs of color in general is roughly 3 times higher than that of other applicants. And we know that there is some inequitable access to capital within our financial system. Our portfolio, I can tell you, looks a lot different. At ACE, we have a broad portfolio and we are geographically diverse within the state of Georgia. And I like to say on this slide, I'm super proud, we don't use any stock photos. These are all our clients who we've helped along the way. And in 2018, we closed out the year having lent 89% of our capital to underserved populations. So now you might be asking yourself, what's in it for you? How can you help? The value proposition of partnership really varies. Some folks have regulatory concerns, policy concerns, others are mission impact centric. But I can tell you for ACE, our impact remains the same. Our efforts improve the quality of life of our borrowers, they create more equity, and they drive job and wealth creation. As a social impact investor, the value might be that you get to use the power of your own agency to invest in people and communities and businesses we serve, create goodwill, and have the opportunity to invest in a trusted, credible organization. ACE is the largest small business focused CDFI in the state of Georgia. We are affecting real change around meaningful key issues while also providing a social benefit and financial return. Access to capital, we know, is a pathway that allows entrepreneurs to create their own success. And a lovely story that I'd like to share with you is about Clara and Cesar Oliguin of CIC Floors. Clara came from the Dominican Republic, and she had a lot of different passions when she got here around music, art, and dance. And but she quickly found a new one with floors after meeting her now husband, Cesar, who's pictured. They dreamed big. They wanted to go beyond installing floors to actually having a showroom. Unfortunately, they couldn't get bank approval. ACE helped CIC obtain a small business loan, which allowed them to rent a small, modest space for their showroom. 2 years later, they got their second loan from ACE that helped them to triple the company's revenue through product expansion. It didn't take long before they outgrew that space, and they actually had, the space was so small, they had clients kind of waiting outside, so they needed to expand, and we helped them get their new 6,000 square foot location. They hit their first $1 million, and we are super proud of that. And Clara will tell you that there were a lot of unknowns in the process, but in addition to loans and capital, ACE provided Clara and Cesar with coaching and connections along the way, access to a marketing guru and a finance expert at no cost to them. Clara participated in a program called Ace of Diamonds, which focuses on helping clients within our portfolio begin to grow and scale. We also help them with connections. We help them acquire multiple business certifications and nominated them up to the Goldman Sachs 10,000 Small Business Program, which Clara recently graduated from. So like CIC Flooring, we have laid a solid foundation. We know that small business ownership is a path to wealth creation, and we could not be where we are in making such impact without strong partnerships and collaborations like the one that we have with CNote, which supports our overall lending to folks like Clara and Cesar. Now you may be asking yourself, how can I help? We definitely appreciate introductions and knowledge share, but certainly one of the most effective ways to support us as we drive towards our very high growth strategic plan over the coming years into 2022 is through grant and loan capital. Grants and charitable donations really support the administrative and operational cost and the high touch services that we provide through our business advisory. And patient low interest loan capital helps us to fund future lending demand to underserved small businesses at fair and competitive rates. So with that, I hope that you have, I've been able to at least demystify a little bit about what CDFIs are, provide you with some knowledge about how the industry got started and some insights into ACE. I'm going to wrap up my component of the presentation and turn it over to Kat Berman, but I'll be back for Q&A, so please feel free to gather some of those questions. Kat, over to you.
Hello there. All right, well, thank you very much, Martina. Quick check-in, you can see me? All right, excellent. So my name is Catherine Berman. I am Chief Executive Officer of CNote. And as Martina beautifully alluded, we are big fans of CDFIs and big champions of ACE. And I'm happy to share more about our work with CDFIs. So let me talk more specifically. CNote, let's make sure this is working. There we go. So quick disclosures and disclaimers. CNote is a B Corp women-led impact investment platform. And so we'd like you to hear this as for educational purposes only. And this is our disclaimer and disclosure. And I'm excited today to talk a little bit about why we at CNote love CDFIs. Martina did a beautiful job sharing so much of the powerful and inspiring impact that CDFIs bring to our communities. And so what I'd like to share with you is more about why we consider CDFIs not just a great story to tell, but a really important and veritable investment opportunity. So let me talk to you about the CDFI case for investment. We often say at CNote, CDFIs are where strong performance meets inspiring impact. There are four main reasons we believe this to be true, and among others, I will say. Number one is capital preservation. So the majority of CDFIs are very strong community lenders, meaning they are conservative stewards of your capital. The CDFI industry, as Martina was sharing, has over a 20-year history and some very strong financial data to support the fact that they are excellent at both identifying borrowers and getting repaid. So really wonderful rates as it relates to repayment and very low defaults and loss rates. One reason for that, if you're curious, is the CDFI local and technical assistance model that Martina alluded to. When a CDFI loans out dollars, they're not just a faceless lender looking at just a credit score. They actually know that community and those borrowers quite well. And so their ability to really understand those to whom they're borrowing, as well as really work with borrowers in terms of technical assistance to usher in their success, are just a few of the reasons that CDFIs have exemplified such strong performance as it relates to repayment and delivering that capital preservation and those solid returns. So that's on the capital preservation side. On the diversification side, we love CDFIs because, as you can imagine, they don't have the same type of roller coaster ride that many of us have been experiencing in the stock market. They're not correlated with the market. They're a new source of alpha, so a new opportunity for you to generate return within your portfolio and offer various layers of diversification given the amount of types of products and geographies you can invest in. As well as place-based and thematic. A third reason we make the case for CDFIs as an investment option for individuals and for organizations is you have a lot of ways to express your values. There are over 1,000 CDFIs across the country with myriad themes ranging from racial equity to women's empowerment to creating sustainable cities. So if you're on the call right now and you're really hoping to align your or your organization's dollars with your mission statement or the organization's mission statement, CDFIs provide a lot of opportunities to get very personal and very specific around how you can channel those dollars for good. And finally, it's really about impact. You know, when we think about investing, most of us are very familiar with ESG investing. And I think that CDFIs and these type of direct investments to begin with provide a different way to do values aligned investing. You're not investing in a very large company that you hope does no harm or perhaps does so good. What you are investing in is people. you're investing in mainstream in America. And as the great stories that Martina was sharing, you're investing in real lives, in the changing and the empowerment of individuals and communities, oftentimes in your own backyard. And so that generates not only a deeper emotional connection to your investment, but also an opportunity to really understand and measure the impact that you're having. And so I want to start off with that first variable, which is, we talked about the capital preservation and performance. What you can see here is the net charge-off rates. As you can see, CDFIs have been on par with FDI institutions as it relates with charge-offs. And I want you to pay special attention to that range of the Great Recession, where CDFIs outperformed FDIC institutions and have been on par with them ever since. There's another wonderful graph we can share that talks about the default rates of CDFIs that actually outperform FDI institutions as well. So again, a lot of data to support CDFIs are strong stewards of our dollars. And as we may have alluded to, big banks have already been on board with CDFIs for quite a long time. As you'll just see in the first bullet point, Bank of America itself has invested over $1.5 billion in CDFIs. And so we see a lot of already interest and support for the industry, but what we're excited to do is really mobilize that support to the individuals and organizations across the country that also want to do something powerful with their capital. And so the kind of wrap up of the investment case is really about seeing CDFIs not just as kind of a nice to have nonprofit down the street, but really as a capital preservation tool that each of us can be using in our portfolio, whether it's our own investment portfolio or whether we are a steward for our donor advised fund, our institution, our foundation. You can think of CDFIs as an opportunity to invest in a higher impact, so something you can do more with your capital for your community at lower risk and still generate a strong return. Another really nice perk about CDFIs that we haven't talked about is really what they do in terms of advancing the UN Sustainable Development Goals. I'm guessing quite a few people on the call are familiar with the SDGs. And so in particular, you'll find that when you start working and investing in CDFIs, you end up really getting to advance many of these SDGs like no poverty, gender equality, decent work and economic growth, reduced inequalities, and sustainable cities and communities. And I share this slide because at the end of the day, what we're so excited about is that this is a direct investment in people. The individuals on this slide are real borrowers from CDFIs. These are individuals who, most of whom were first-time entrepreneurs, had an idea, could not get a loan elsewhere, or certainly could not get a fair cost of capital elsewhere, turned to a CDFI and not only got that responsible capital, but that technical assistance to see true wealth creation, both for themselves and for their families in the future. And so that makes us incredibly excited to get to invest in these types of organizations. And so what am I doing here? Why does CNote exist? Well, it starts with about 5 years ago. I'm sitting with a friend of mine in a cafe. I had been a fan of CDFIs for over a decade and wanted to invest in them in my own portfolio. And I remember speaking to a friend of mine about CDFIs, and she said, I love CDFIs. Just give me a simple way to invest in them on my terms. And I'll never forget that language, that narrative, because it made me think, well, why isn't everybody investing in CDFIs? And is there an easier way? And so when I started diving into it, what I found was there are some historical barriers that made it a bit more complicated for each of us or organizations to invest in CDFIs. And I imagine some of you listening in today may have experienced a few of these. You may have a local CDFI that is tremendous, but simply doesn't have an investment product that you can invest in. So they don't have a note created. You may have tried to invest in a CDFI and find that the return is not on par with what you're expecting or what you need in terms of your fiduciary responsibility or what you're looking for your portfolio. You may have found that the lockup periods that in working with CDFIs were a little bit too long in terms of duration for what you were looking for. One of the things we found was transaction and investor management, the ability to invest in a CDFI and make it easy, where you're not faxing a lot of papers or having to do a lot of mailings, where it's pretty easy and seamless, can actually integrate with the types of investments you're already doing. Some limits on customization we found as well, despite so many wonderful themes CDFIs address. The ability to say, this is the theme I want to address or I want to align with, and then actually be able to invest in that through CDFI was often problematic. And the result of these historical barriers, unfortunately, is we saw a lot of capital flowing to just a handful of CDFIs. And given there's over 1,000 CDFIs across the country on the front line doing tremendous work, we knew we could do better. And so this is why we created CNote. We really believe that financial innovation can play a role in closing the wealth gap in the United States. And so we work directly with the CDFI industry to unlock the power of CDFIs for all. The platform in particular, which you can easily access at mycnote.com, has 4 central tenets, and this is really getting back to those friction points we saw that we're trying to break down to make it easier for each of us to invest in CDFIs. Number 1 is we bring to the table expert-driven diligence. We know that it can be often problematic and sometimes a very long process to diligence one CDFI, if not a handful of CDFIs. So we've created an expert-driven technology and process to make sure we're only giving you access to the high-performing CDFIs that are part of that group of capital preservation. The second is market rate returns, making sure that the investment CDFI products that we're delivering to you are in par with the type of competitive returns that you're looking for. The third is customized placed or impact themes. And so the ability to more easily say, my organization believes in immigration rights. Here's a CDFI product that you can invest in to double down on your mission and drive those dollars that are currently invested in traditional fixed income assets in a 100% impact product that really aligns with your organization's or personal mission, or place-based mission if you want to invest in your own backyard. And the last is operational ease, making it very easy to transact, and so that there's not a lot of paperwork or a lot of human capital on your end that has to be committed to this to make this work for your organization. So these are just a few of the properties that we like to bring to the table. One is place-based. So CNote has a network of nationwide CDFIs, really allowing folks who want to invest in a specific city or community to drive those dollars into those CDFIs, as well as impact themes, as I had mentioned, ranging from racial equity to women's empowerment to sustainable communities and so forth. This will just give you a few of the CNote product examples that we co-create with CDFIs. The one on the left is kind of our broadest portfolio of, if you're interested in investing in CDFIs and want a really nice diversified mix of CDFIs, kind of exposure to the industry as a whole, we have the flagship fund, which is 100% invested in underserved communities via CDFIs. The second is the Wisdom Fund, very much focused on creating more wealth for women of color through entrepreneurship. And so we work with a group of CDFIs to make sure that all of those dollars are advancing that effort through the Wisdom Fund. The third is the Promise Account. This is our fully insured CDFI product where you can invest in low-income communities across the country and also have the full faith and credit of the US government backing it through the FDIC and NCUA insurance. And last is the Racial Equity Fund, focused on investing in more minority-led businesses and racial justice efforts. And so these are just a few of the types of CDFI products that we're able to create through our platform, and more importantly, that these tremendous CDFIs have at the ready in terms of being able to facilitate, given the important work that they do. And so just a quick note, a little bit of what we do differently or how we think about unlocking CDFIs. I think one central tenet for CNote is it's important that we open this up to everyone. If we're going to close the wealth gap in the United States, it's important that each of us get involved. And so we make sure that we have products open to everyone, accredited and not accredited investors, so that everybody can invest in CDFIs. We think impact and performance hand in hand are really important. It's why we give impact and returns, not impact or returns. And so really offering competitive returns. Accessing the whole network. As I shared, we have a nationwide network of CDFIs working from very small CDFIs to very large CDFIs. Keeping the entry point very reasonable. So we have products that have no minimums. You can put $1 to low minimums. And so again, really trying to reduce the friction to get involved in this industry. Measurable and transparent impact, so the importance of impact reporting and knowing where your money flows. And finally, and incredibly important, just a commitment to this industry, working with industry partners and co-creating these efforts with CDFIs to make sure that as these dollars keep flowing, that this is capital that's actually useful and innovative CDFIs, empowering them to do the great work that they're doing in their communities. And so if you're interested in learning more or interested in making a first or a subsequent investment, I wanted to share a few ways to get involved. CNote is definitely not the only way. We have several examples here of other organizations you can check out. If you're looking to invest specifically in one CDFI, their note, or in a grant, we encourage you to look at individual organizations like ACE, who you heard speak of today, which is a tremendous organization. LIF and TRF are other ones that have individual notes that you can check out. If you're looking to invest in CDFIs as a piece of a larger note, meaning alongside perhaps international microloans, Calvert is a fantastic option. They have a great pool of loans that give you exposure not just domestically but internationally. If you're looking to invest in a diversified set of CDFIs or customize your work with CDFIs, obviously CNote, we're happy to help you in that front. And then I'd like to point out two fantastic resources and partners, Eris and Opportunity Finance Network, that have a tremendous information on their websites about the CDFI industry, and also if you need to locate a CDFI in your neighborhood. So I wanted to end on a story. As you could probably tell from this webinar, we enjoy storytelling. And it's because it really is the proof point and a wonderful demonstration of the power of CDFIs. And so I want to tell the story of Jameen Moden. So Jameen is a first-time entrepreneur based in Atlanta, but she, prior to being an entrepreneur, was an athlete, a very successful track star, winning championships and a lot of awards on the hammer throw. And when she decided to retire from sports, she still had that fire. And so she decided to pursue entrepreneurship. She realized in her community that there was a gap in the market, that the types of security services that were being offered really were not great from a customer-centric lens. And so she decided to launch her business, Skylar Security. The issue was, now what's next? She had a vision that Skylar was going to grow very big and be one of the sustainable large businesses in the community. But then how do you do that? So what she did as a first-time entrepreneur is she went to our partner, who you heard of today, ACE. And she went to ACE for her very first loan for $35,000. The beauty of that is not only did Jameen get her first-time capital, fair cost of capital to get her off the ground, but she also got a business coach. And you can imagine for Jameen, she was very used to coaching being an instrumental part of her life and a way that she advanced her own success. So when ACE showed up and said, not only are we going to give you responsible capital, we're going to help you grow this business with a free business coach, she was beside herself. And so I'm happy to say that Jameen is off to the races. She is on track right now to grow to 1 million in revenue with over 200 security providers. And in 2019, Skylar Security was actually selected to be one of the preferred providers for the Atlanta Super Bowl. And so just a wonderful success story of what happens when we invest in CDFIs and entrust these amazing organizations to do good things with our capital and mobilize those exciting initiatives. And then on that, I'll say thank you so much for your time and look forward to questions.
All right, everyone. So I'm going to invite Martina back on stage. And then as I'm doing that, I encourage you all to go through the questions and upvote any ones that you like or really want to see answered. And I'm going to sort the questions that we have today from you all by the number of upvotes. And we're going to kind of try and democratically go through those questions and make sure we answer your most important questions first. But we've reserved quite a bit of time here. So we've got about 20 minutes or so. I don't want to make anyone late for lunch or if you're on the West Coast, but we want to try and get through these questions. So it looks like Emily's question is, what are some of the impact measures that CDFIs and CNote are using? That's the most upvoted question we have right now. And it looks like Martina is about to join us, but as Martina gets ready, Kat, I don't know if you want to tap.
Sure, I'm happy to get started, and then Martina can provide even more specific information. So at CNote, there are a couple things that we do. We try to provide quantitative and qualitative impact measurements. So we look at things such as where specifically have your dollars gone, right? Where it's the percentage of dollars flowing to women, percentage that are going to minorities, percentage going to low-income communities, and then what's the actual dollar value of that. We look at things in terms of wealth creation and how many dollars, what's the increase of loan size that's happening. We look at things as job creation and affordable housing units created. So depending on the type of CDFI, because we do work with CDFIs across the nation that work on everything from food deserts to developing low-income schools. So you can imagine how you measure each of those varies. But we start by talking with the CDFI to understand how they're currently measuring impact, and each one of them has their own system, and then working with them as well on kind of a version 2 to understand what's going to be most helpful for our investors to know. What are the stories that are important for our investors to read so that they can understand where their capital is going? And then lastly, how do we move from an outputs to an outcomes-based impact measurement? So that's a little bit of how we think about it at CNote. And Martina, would love your thoughts in terms of specifically what you want to share about ACE.
Yeah, absolutely. I think Kat covered a broad spectrum of how CDFIs generally do impact measurement. We have several KPIs on our side. We're focused on small businesses. So the one thing that we are able to quantify, it be beyond the lending, the capital that we're able to lend out to diverse communities. As an example, in 2018, we lent $11.1 million, and 89% of that went to underserved communities. We also track and measure the jobs that are created or retained through our lending to those individuals. So we have those numbers as well. We measure the counties that we do work in and impact around. And then I showed a slide earlier that illustrated our $29 million loan portfolio, which is the size of it to date, and all different sectors of the market that we're in. So we have a diverse portfolio that cuts across auto, transportation, retail, restaurants, healthcare. So it spreads the gamut. And just from a numbers perspective, last year, of the 11.1 million that we lent out, 5.3 million was to the African American community. And of that, 25% of that went directly to African American female borrowers. So we are tracking down to those levels of detail.
Yeah. And then I would say, just to add on a little bit, CNote provides quarterly impact data, and we always report jobs created, maintained, percent of capital to female entrepreneurs, minority entrepreneurs, and then percent of capital deployed directly to low-income communities. So those are kind of like our core KPIs. But, as Martina and Kat hinted at, there's a lot of nuance, and you can really dive deep on impact, and we try and do that when we can. Going on to the next question, it looks like Emily is asking some of the best questions, because we have another one from her that was it's the top one for me right now I'm seeing is, and I think this is more for Martina, but it's how are CDFIs engaging communities in their capital investment decisions? For instance, are residents serving on boards or helping to set underwriting on loans, et cetera?
Well, we definitely engage communities in many ways. We've learned through our process that there was not only a wealth gap and a trust gap, but also a capital gap. So we have different initiatives in place. As I mentioned, we loan from $15,000 up to $1 million. We don't have residents set our underwriting practices because we have a team of qualified kind of subject matter experts who do that. But what we do is engage that community. As an example, we do some place-based work here in Atlanta on the west side, as well as in what we call a neighborhood planning unit, an NPU unit within Atlanta that focuses on doing micro lending, some smaller lending to those community residents. And we have lots of conversations. We've been on the ground now for a couple of years. We have an employee, a staff member who actually sits within those communities and it walks a footbeat, so to speak. And she goes around and she's had multiple sessions and we offer up to 20 hours of business services to those small business owners who are trying to figure out, how do I just go from needing, micro loans? And some of them, what we have found in this process is that, again, it's very high touch what we do. that they're not ready for capital. And when they are not ready for capital, we refer them on to our Women's Business Center, where they can actually talk to someone about the different things that they need to help them get capital ready. So we've learned that there's also a knowledge gap with some folks by being in the community, but we are very collaborative here in the Atlanta market with a number of different players, as well as academic institutions like Morehouse College.
Excellent. So I'm going to try to go to some of the more recent questions too, because I don't want to only do the highest upvoted, because I know a lot of you are kind of entering into the question asking phase now, and I don't want to leave you behind. But one question I'm seeing is, how is CNote's work similar and distinct from community capital management? So Kat, maybe you can take that one.
Sure, yeah, so we love CCM. I think they're a tremendous organization. I think probably the first distinguisher is we are 100% focused on CDFIs and CDFIs of all sizes. So we work a lot with small to medium-sized CDFIs, really making sure that CDFIs of all colors, of all leadership, and of all sizes get access to capital. And the second probably big distinguisher is it's via technology. So we are really using the power of technology to make sure that CDFIs can be accessible to investors, and so that investors have a variety of ways of working with CDFIs, depending on the type of return they want, the type of values investment align. But I think you can see us more as partners than competitors, because I think they're a tremendous organization, and we're actually in conversations right now to do things together. And I think if you're thinking about investing in CDFIs, you'll find with both organizations two really interesting ways to deploy capital, but just in different ways.
Excellent. Let me see here. We got some new ones coming in, which is great. Please keep asking questions. So this is an interesting one, and maybe both of you can ask, but Brent was wondering, are there any products that aren't loans through CDFI? So I think he's asking, does CDFIs only give loans, or do they do other things in the community as well?
Yeah, so I'll kick that off. Most of our products and services are loans. Like I said, the F within CDFI is finance. And so we do that through the lending arm, but we do provide financial education. And again, so that is something that is of no cost. We run a women's business center in Norcross, Georgia, that is open to, it's agnostic to women or men who want to come in and get help around thinking about how they grow their business. We offer things on our site, and this is where the grant component of what we do comes into play, because we also offer things on our site like the Dream Builder. It's a module system that you go through 12 modules. By the time you get to the end of it, it runs you through a set of questions related to what type of business you want to do. And at the end, it helps to kick out a business plan. That's of no cost. Other things that we offer include, it's more of a lever that we use, is through the Tory Burch kind of Bank of America program. We have an interest buy down program. And so we have that, and we can utilize that when someone comes to us and they are collateral light. We partner with Community Advantage Loans, a program, a government kind of program that helps and serves as a loan guarantee program for some different types of borrowers. So we utilize different innovative, services and products to help, at the end of the day, the borrower.
Excellent. Yeah, I think CDFIs do a lot more than just give loans out, and they don't get enough credit for it often. So it's always good to put a little airtime to that. Looks like I have two kind of highly upvoted questions here, both I think for Kat. One is, and I'm going to ask you both because I think they're related, and try and knock them out at the same time. What is the minimum capitalization investment threshold for CNote? Specifically, how small of a CDFI will CNote invest in? And then the second part of that same question, I think, is how does a CDFI become part of the CNote network or offering?
Sure. So you want me to start with that? Yeah, so in terms of thresholds, so we've worked with CDFIs as small as 5 to 10 million in portfolio size. So again, we are trying to be very inclusive. We know some of the hardest work happening in our country is happening in very specific small and rural communities, quite frankly, or urban communities that aren't getting as much love. And so how do we make sure that us, we as a community of impact investors just don't go for the big guys or the most obvious guys, that we're really shining a light on the communities that need it the most? And oftentimes, as you can imagine, those organizations don't have the marketing budget or the technology budget to say, hey, invest in me. So this is a really important bridge that we're trying to use technology for at CNote, is make sure that those CDFIs get just as much love and capital and attention of the important work they get as some of the larger CDFIs that are very lovely budgets. So there's that. So that's kind of to the house, the small size CDFIs we go. And then in terms of getting involved with CNote, please reach out to us. I would say if you send a note to support@mycnote.com, we can channel it to, we have a fantastic CDFI ambassador, part of our organization that just spends all of their time working and loving on the CDFI community. And it's all about understanding, what are your needs? How are you growing as an organization? What kind of capital do you need? What are the constraints of your community? And then what we can connect with you. One of the things we didn't talk about is, a couple of the things we do at CNote are outside of the investment. So not only do we try to bring new investment to CDFIs, we also try to bring visibility in terms of storytelling and public relations, and really trying to shine a light on this incredible industry and connections, and then opportunities to engage new partners as well. So as a new CDFI partner, hopefully that's what you experience in partnership with us, is not just kind of a transactional, have some new dollars, but how do we grow as an industry, really, and make this an investable opportunity for everybody. Hope that answers your question.
Yeah, I think, sorry, I gave you a couple tough ones, but I think it's two people were very interested. So another question I'm seeing, it's kind of two similar questions, is, our CDFIs and CNote collectively, do they have any environmentally focused offerings? And maybe we can talk more broadly about sustainability, or the kind of offerings or themes that CNote and CDFIs can address.
Yeah, I love that question, because I think that's one of the myths of the CDFI industry. When I talk to people about CDFIs, and often folks unfortunately don't know about the industry, if they do know about the industry, they often think that we're only working on job creation and small business lending, or maybe affordable housing, and that's it. And as most of us who've worked with CDFIs know, you work on so many more things than that, including the environment. So we actually work with some tremendous CDFIs doing really hard work. Just to give you some examples, one CDFI that we're working with is really working with communities in the Midwest to move them from extractive communities to sustainable communities. So how do you take an entire workforce who's been dependent on coal and mining and move them into sustainable jobs? Those are the frontline work these CDFIs are doing. And those are the types of investments that we want to be making. And so the answer to your question is absolutely. We work with a number of CDFIs doing really cool work on the environment and sustainability.
All right, going through. So another question, actually, I think is an interesting one, and it's back to themes, but homelessness, this person asked, Alan asked, any focused on reducing homelessness specifically? So maybe through affordable housing initiatives or anything like that. I was wondering, maybe Martina, do you have any ideas or suggestions about how ACE is addressing that issue?
Yeah, I think when you think about a CDFI in general, there are a lot of ancillary benefits to the work that we do. So when an individual gets a loan from us, they not only, it empowers them to start their business and improves their life, but it improves the life of their family. They're able to hire individuals, which generates income for those individuals. And then they usually, set up within a community, and now they're increasing the tax revenue and the tax basis for that community. So, whether it's a food desert or something like that, now they're putting revenue back into the community. As it relates to homelessness, I think that's one example of how you can, by investing in a community that's been disinvested in, you will bring in different services. We focus on small businesses, but there are other CDFIs who are focused on building community centers and mixed use development. We have some collaborations where we've worked within neighborhoods around making sure we support the business, and then the other CDFI brings in the affordable housing. And then the third CDFI will focus on mixed use development to ensure that there are daycares and educational centers or services like human services for homelessness.
Gotcha. Great. Kat, I don't want to cut you off, but I was going to go to the next question, if that's all right.
I'd rather hear Martina speak than me. So yes, more for her.
I got a question for you from Stuart asked, and I think this was during your presentation, Kat, so I think it was aimed at you, is he saw you share some of your investment products, and I think he was wondering how you benchmark and how you compare your returns and offerings to other products.
No, it's a great question. So for majority of those products you saw, and I think the majority of products we create with CDFIs, they are fixed income instruments. So we are usually comparing them to short duration instruments that you can get. On the flip side, we have that fully insured product, right? And so the comparison we make are similar depository products. In this example, would probably be a 90-day CD. So that's what we're trying to do, is use, duration and industry examples in the fixed income and cash space. And we actually have some good performance metric information that actually shows the graph of how we compare. So if you're interested, please send us a note, and I'm happy to share all that information with anyone who's on the call.
Great. So this is an interesting question, Kat. Valerie asks, my organization is a place-based investor, but there's only one CDFI in our state. We'd like to diversify. Is there a resource, or do you have information on, how I can get involved working with CDFIs in other states?
Absolutely, and there's a bunch. I think obviously we're big fans of Opportunity Finance Network, OFN. So they're an amazing resource in terms of a landscape of CDFIs. Clearly the Treasury Department CDFI fund obviously has the listing of all the CDFIs. And then from an interconnectivity piece, I think OFN or CNote would always be happy to make those introductions. Because we work with a nationwide network, if it's easy for us to be a first stepping stone for you, we're happy to do that. So if you know that you want to invest in the adjacent state, or you want to invest in 10 new states that are nowhere near you, we can usually give you a pretty good sense of who are the CDFIs, what they're investing in, and also give you some performance pricing as well. So there's a lot we can hopefully be helpful with as you step into that, but that's great to hear. And I think either us or definitely OFN hopefully can help you step into that.
Yeah, and I'd like to add to that, Ares is a good option too. They are an independent third-party auditor of CDFIs, and you can go to their site and for a cost, download some information about CDFIs in terms of our impact reports and what we're doing. And they do a very, very, deep dive into all of our books, our loans, and we're excited that we are an Ares rated organization as well.
Great. I think I have a contact slide up. I don't know. I'm having trouble seeing it on my screen. I don't know if
it's not showing on my side.
Okay. I'm going to take that down and just let you know that if you want to visit CNote and learn more, it's www.mycnote.com, and then ACE Loans is www.aceloans.org.
That's correct,
right, Martina? And we're almost out of time. I see one question here. Alan was asking, Calvert and Capital Impact Partners have QSIPs, and I think he's talking about maybe buying these financial products. Does CNote have any plans or ability to do QSIPs, and what's that?
We are, and we do. The operational ease piece of that slide I shared, we're really trying to meet folks where they're at. And so we've heard that from the folks. So we actually launched our first QSIP, I think it was, if not 2017, 2018. So yes to the QSIP, and yes to using those for further products too, if that's helpful. So we always like to have that conversation with folks of what do you need? And if we don't have it, is there a way we can make it happen so it's more easily accessible with your current systems?
Awesome. Okay. Well, I think we've hit the meat of everyone's questions, and it looks like we've got about 3 minutes until we're at the top of the hour. So unless Catherine or Martina, you want to add anything, I think we can wrap it up.
Any last thoughts, Martina?
I would say, first of all, thank you for taking time out of your day to listen in to what CDFIs are. And if there's any takeaway, it is that we do make real impact. We change the face of communities. We are investing in people and places, and we provide a social benefit as well as a financial return to those who provide us with capital. So that's one good piece of it. And it's not an and or situation. You can provide a grant as well as capital for us to lend out. And thank you both, Mike and Kat, for hosting this.
Thank you, everybody, for coming. And thank you, Martina, for driving this change.
Absolutely.
Yeah. Thank you. Thank you, everyone. I'm going to close the webinar in just a second here. Really appreciate all the attendees. We had a lot of people join us, and I hope we got to all your questions. If you have follow-up questions, you can reply to any of the webinar emails you got, and we'll make sure we get back to you. So thanks everyone, and you have a great day.